My name is Rick Sadler. I'm the founder of Hit and Run Candlesticks, and I'm going to do something a little different today. Rather than a PowerPoint, we're going to look at some live charts and talk about a chart pattern that is very near and dear to my heart. And the reason is it is I shouldn't say pattern as much as strategy. It's the strategy that that took me from trading as a hobby to actually trading full time. That and a couple other little things, but this was the main thing here. I used to live I started trading in Fairbanks, Alaska, and I would get up early in the mornings, and very early, by the way, and trade all day, and then the market closed at noon, and then I would go do my job. I was very fortunate in the type of job I had that I could do that. And I spent several years just simply trading as a hobby, always making the excuse, well, I'm learning something, one day it'll all kind of click and happen. And really, that's not the case. It was really a time when I had to sit back and say, okay, this isn't working, and why isn't it working, and what can I do different to make it work? Simplicity was a huge thing. I went from a very cluttered screen to a simple screen. The screen you see here is a very simple screen. Now I do use different ones. Like for instance, this is a screen that when I'm in the trading room, this is probably the #1 screen that I share, followed by maybe this screen right here, which is even more simple. The one we're going to use today is this one, and this is because the chart pattern, or rather the strategy that we're going to talk about, is the pinball, what I call the pinball strategy. And we'll share everything I could possibly share with you about it. And if I could figure out how to get questions, I don't quite know how to do that. But if there are any questions, I'll be more than happy to answer them in any way I can. And for that matter, before the end of the day, what I'll do is give you the password for the trading room, and you're more than welcome to step into the trading room the rest of the month, and I will be more than happy to talk about this or any other strategies that we use. Okay, so let's get started here. Enough about me and all the chit chat. The pinball setup is what I call my little ATM machine. If you go back to an old article in Trader's World, there's an article there about the pinball setup, and many times I've called it my little ATM machine. And the reason I call it the little ATM machine is because it's something that pulls up 10% plus profits. Not every time, I want you to know that, there's this chart pattern strategy. Certainly, it's like all other strategies. There's no guarantee it's going to work out, and you still need a certain amount of trading education. Working with support and resistance, understanding of candlesticks. I love candlesticks because they tell us what price action is doing, and price action is king, absolute king. So when I first started trading, I was originally taught to trade off the bottom and look for, candle patterns or candle signals in a so-called oversold condition. And I went broke. I mean, it's as simple as that. I even went broke twice. I did not learn the first time. And it was after that second time when I had to sit down and have a real conversation with myself about stock trading, whether it was really something you can make money at. And after doing a little bit of research, talking with a few people, and crying on their shoulder, and taking an honest look at charts, I realized that buying low and selling high wasn't the best thing in the world to do. Buying low meaning trying to pick a bottom, nor was just the term selling high. You've got to have a plan, you've got to have a reason, and be able to pull profits off. So that's how the whole pinball setup was. It came about slowly, and that's about the time the T-line came around. The T-line is the 8 exponential moving average, and that's this black line right here. When I started using that, a lot of things changed for me. And when I realized that stocks went up to a magical level and either leveled off, consolidated, or pulled back, that was another aha moment for me. And if I learned to control, my patience and greed, then what I could do is I could pull 10% or close to it, 7%, even up to 15% off the table, depending exactly where it's entered and exactly where you sell it. And then I could even make more money if I only sold half the position and allowed the other half of the position to work. So when it finally made sense, that aha moment truly became real, it was a game changer for me and my family. So that's what I'm going to share with you here. Here's TK. I've got some charts I want to look at, and then I've got a couple of charts that may be setting up possibly now that I'm watching for that for the pinball setup. Sorry, I was moving some things around here so I could see what's going on. Okay, so what we've got here is a lot of people like to trade off the bottom. We call that bottom picking, and bottom picking is just uncool. You never want to see anyone pick your bottom. It's just uncool. I know very few traders, successful traders, very, very few, that actually make money by buying, say, a doji and a bullish engulf in an oversold condition. I know very few people. And one of the reasons why is, one, they're either way too greedy thinking the stock's going to run way up here, or they don't understand resistance or even how to take simple profits off the table. They don't understand what if you took 10% off the table? What would that do for you? Wow. I mean, have you ever stopped to think, if you were consistent about that over a year's time, the kind of money that would be made? So that's what I did here. And on the pinball setup, the main thing I'm looking for is a close over the T-line, like this is right here, close over the 8 exponential moving average. And then I'm looking to buy the chart. Let's use this one over here. I'm looking to buy the chart basically on an inside day. So as it comes back into here, I'm looking to buy it. I like to buy it below that first candle. That's where I like to buy it. And then from there, that's where you follow it up to the 34 exponential moving average. When I first started doing this, it didn't, I didn't realize that I had to sell the stock to make any money. In fact, what would happen is, more times than not, I would actually be in the position, I'd be making money, and then it would hit the 34 and actually come back. And it's like, what in the world? Why can't I keep this? Look, I admit I'm not the brightest apple that ever fell from the tree, and I'm a little bit slow. But it did finally sink into me that, well, you numbskull, why aren't you selling it up here? You would have had, you would have had, let's see, you would have had a nice little 10% profit or so if you would have just taken your cash off the table. You can always buy it back if it pulls back. Well, so I did that for a long time. And by the way, that's why it's called a pinball setup, is because for so long, what would happen is I I'd buy the position, it'd run up, it'd pull back, and then the position would go back up. And then who knows, it might even fall again, and then it might go again and then actually break out. Lo and behold, what have you here? You've got a constructed bottom. That was one of the things that I discovered after trading the pinball setup for a while. So what would happen is I finally realized that, okay, let's start taking some profits. So I would do that, and after a while, hey, this is working. And that was when it became apparent to me that stop all that bottom picking. Stop trying to guess this is going to be the bottom. Now, in this particular chart, certainly you could have bought the bottom, and look, it went all the way up here to the 200 simple moving average. But the reality is that doesn't happen all the time. But what we can do is we can get a nice relief rally bounce on a close above the T-line back up to that 34 EMA. Another thing that I realized, what was very important, is that always take half off the table. Always take half off the table, because you can still let the second half work, and it leads into another chart pattern or strategy that carries it up to the 200, just like this one does. This is another chart pattern that we use a lot, but we're just going to talk about this one right now. Okay, so there's one stock here. Let's look at another one. Hertz. I have Hertz written down. Here we are. Hertz is actually, I think, set up to move higher here. If you're not watching it, this might be one to keep on your watch list. But it's also a pinball setup here. We've got a nice little Morningstar signal. Let's do this right here. We've got a nice little Morningstar signal with a double bottom. There's your Morningstar signal in there, a type of Morningstar signal. And we have the close over the T-line. So now if you would have been a buyer in the top half of that Morningstar signal, and a lot of times what you can do is come over here and draw a line like that right there. And then you're a buyer in this area right here. And this was a one-day boom. That's 16%, 15% to the close, maybe a little higher if you were, you know, a good micromanager. You could have pulled more than 15% out of that. But that would have been one right here that is now leading up higher to a higher move. And we're not bottom picking, because what happens is, and I used to use the 2 EMA a lot. The 2 EMA would work as a crossover. I don't know if anyone here ever works with moving average crossovers. That's a very popular strategy, and used correctly, it can be extremely rewarding. Well, that's what happens, is that 2 EMA will start crossing over, and you actually start a little bit of a tiny little trend. And whenever you get a little tiny trend started, a little bit of motivation in there, you can almost bank on a little bit of a relief rally, and that's all we were looking for. I mean, can you imagine if you were trading stocks and you had a strategy or 2 or 3 or 4 that could put you know, 10-15% in your pocket on a consistent basis. By the way, when I use the word consistent, I don't mean 100% of the time. Absolutely not. I mean, hey, look, you're going to have 3-4%, maybe 5% losses, depending on where you set your stops. But if the majority of your trades were that 10 to 15%, and you had some losses at 3, 4, 5%, you're way money ahead. In fact, if your account size is correct, then you are making a living if you have everything set up correctly. Okay, another one here I have marked. I have a list of stocks marked. Oh, here we are. Where a WAIR, excuse me. Here we've moved down, and now you see we've started to put in a little bit of a bottom here, and we rallied up, and right in there right in there. This would have been the first day it actually became a true pinball setup, and the buy would have been the next day. Okay, let's talk about this a little bit, because I mentioned earlier on that I was trained picking off the bottom, candlesticks, using at the time stochastics, oversold. I no longer use any kind of oversold indicator, but it doesn't mean I trade. It doesn't mean that I don't trade using an oversold situation, and that's one thing I want to explain here. One of the minimums that is required here in the pinball setup is 10% between the T-line or price and the 34. I kind of prefer the whole T-line itself, because that ensures me that we have a true 10% between the T-line and the 34. Sometimes price might only be 9%, although I like to have it 10% to the 34. And what we're doing is spreading this out. When you spread this out, you're creating an oversold situation. And price likes to go back to its mean. I mean, if you look at any chart at all, I mean, that's what moving averages are. Look how we started here at the 34, down, went to the 34, went higher, broke down through the 34, went up, paused right here at the 34, down a little bit, back up. You could do this with the 50-day simple, the 20-day simple. Heck, you know, you could put some crazy moving average up there, and you'll find where it goes back to those moving averages, especially major moving averages such as the 50 or the 200. And when that starts to happen, or when you realize that reversion to the mean is happens often, and you can come from an oversold situation like this, take advantage of those two conditions, and now you can put together a trade that might be worth something in the neighborhood of, this one is 9% to the 34. And this is where, again, always take 50% off the trade. You can certainly close a trade out too. Close a trade out, you can always get back in it. So now here in WAIR, like a couple of the others we've already looked at, they've continued higher, and that's where you let it settle down. Then you can come in there and buy on a breakout of resistance. Right there would have been resistance. So you could have bought the breakout, and that would have been a minor little pullback. And you can see it held that support line right there, that price action support line. Or you certainly could have waited till it broke out here, and now it's headed up again. And these are live charts, by the way. I mean, this is WAIR right now as we're seeing it. And it may be set up now for another move up here to that 200 simple for about 14%. HOS, I've got that one marked. Here's another one, HOS. Here we are again with a Morningstar signal. We rallied up, and you can see it failed. It pulled back. When it came up again, this might have been the better time to buy it, not necessarily right here. I don't know if you've ever noticed, but typically with candlestick signals, you'll get the candlestick signal, and to think that it's just going to go up like this, that's what, you know, that's what the books tend to say, because they're just showing you, positive charts. You know, when you're looking at charts in a book, excuse me, I shouldn't say all the books, but when you're looking at a chart, that's what they're showing you. Or you go to webinars, that's what they show you. The reality is, what happens is you generally get some consolidation in there, and that's just what's happening right here. And that breakout there, that second breakout, probably should have made that green, shouldn't I have? There we go. That breakout there, that's the breakout you want to start looking for, and any consolidation to the right, and you can see that right there, right in there. So either this day, any one of those days could have been bought based on this chart pattern. And when you have that, I'm going to draw a little box around this right there. When you have a something we call pop out of the box like this, then that comes after a candlestick signal up over the T-line in that oversold condition, it just primed to move higher, just primed to move higher. And you can see in this case, we had a nice gap up that rallied all the way up, almost 50% up there. But if you would have just taken it off, you know, at the open or close to the open, man, that's a 20-25% trade maybe on HOS. Here's another place. Here's another one. See, you have a hammer, low, high, higher, low, double bottom here, and we started to move up. So that could have been bought either on the first day or the second day, for that matter, on this day here, and then we pop up there for a nice little 16% trade. I get asked questions often. Well, how would you know to sell this because it pulled back so much? Simple. I say simple because the rules are sell 50% at the 34 EMA. That's, I mean, bare minimum. So you take half off the table, and then if it pulls back, it's not so rough on you, and you can see that you know, it still came back up there, but here it started to fail and actually went down. In the meantime, that would have been a nice little trade that put a nice percentage in your pocket. Here is a, well, let's do this one right here. Here's a trade that I am currently long in at the moment. Here's our downtrend. You can see some price, the price action is developing a bottom, constructing a bottom. And then here we are over the T-line. So any one of those days could have been bought. I mean, in fact, it could still be bought in here. I'm still waiting for that breakout to get us to the 34. Now I'm a swing trader. I'm not a day trader at all. I mean, if I'm given a gift, you know, if this was to move 10, 15, 20% in one day, would I take half off the table? Of course I would. And that would have nothing to do with the fact it tagged the 34, just simply because it was a gift. I'll take part of it, maybe even all of it. And so here we are setting up with a nice, tight, very tight little wedge in here. Also coming off of what appears to be a little bit of a W bottom. There's our kind of a W there. It's well, it probably did that certainly incorrectly. There we go. There we are. Little W bottom, and we broke out. So, like I say, this is one that I'm long in. I've yet to make any big money in it. Oh, there it's popping up right now. Who knows? Maybe it'll jump up there a little bit. So maybe this will get ready to pop up. So we'll keep an eye on that. But if it does, then what's going to happen is I'll make somewhere in the neighborhood of 10, 12, 14%. I got it down here, so it'll be, you know, somewhere along the lines of closer to 20%. Oh my, okay. Well, we'll just go take a look at another one here real quick, and you know, maybe before my time's up, we can revisit this a bit and see how it's doing. MACK, M-A-C-K, is also one that may be setting up right now. And you can see here, we've been in a downtrend. The T-line is below the 34. 34 is below the 200. I like the original pinball setup was set up so that you were below the 200. I know a lot of people that have changed that around a little bit, but I still look for pinball the old way, where everything is basically trending down. We're getting a bottom, some bottom action happening, and we're above the T-line. Now, anytime we come from the bottom and above the T-line, if you take a look at the chart, you'll probably notice that you're above that first line of resistance. So here we are moving down, put in some lows, and we move lower. So as we move up, doesn't this become resistance right there? And that's just about where that T line is. So now we start moving over that resistance, and now we're just walking along it. Always use a fat line, by the way, when you're drawing trend lines. I know that some programs you can't, like this program I use, you cannot, but I just imagine it being fatter. So now what it is, we're trading off support, still in that oversold condition if you take in consideration we're 10 or so % away from the 34 EMA. Remember, price likes to return. I mean, look at this. Look how it returned. It returned. It returned. Actually went up higher and then failed it. All I want is that return. That's all I'm after. I'm after just a simple little 26%. That's all. I don't need any more than that. I'm happy with that. Here's a chart that I'm actually still in right now, and I'm in half the position. That's UVXY. I was in UVXY because it was setting up as a pinball setup, and I got in early, and I ended up taking half the profits off the table on this big day up. So I put a nice little, I think it was actually like 17 or so %, if I remember right, is what I ended up claiming here. For the first half. I'm still holding the second half because I am a swing trader. So I'm going to let this continue to work as long as the chart continues to work. And you can see where it pulled back. It came right up to that 34 again, and now it's pulled back. As I mentioned to the folks in the trading room this morning, if you take a look at this on a 2-day chart, it's set up for a pinball setup. And that's what I've moved this trade to, is a 2-day chart pinball setup. So I'm still looking for it to move up. Now, will it get to the 34? I certainly can't guarantee that, but that's all right. If it got halfway and I was able to put another 20% into my pocket, or close to 20%, I'd be pretty happy. So I'm monitoring this now on a 2-day chart and a daily chart. I use a daily chart most often, but that's kind of what I'm looking for on this trade right here. I can never tell if there's any questions. I don't know how to pick up the questions using this program or not, so somebody will have to let me know. Let's see, what else do we have here? SIG, S-I-G, this is one here. See how we're in that downtrend, and we're in that oversold condition where the T-line is below the 34. In fact, it's below the 34, about 12.5%. And I have found that that 10% number is, I wouldn't go less than that. The more you go, the better. Not saying that it's always going to get to the 34, but the more it's pulled away, the more likely you're to get that snap back up like this right here. A couple things I look for is I want to see a pattern or a candlestick, a chart pattern or a candlestick pattern that gets us up over, excuse me, over the T-line area. In this case, we've got a nice little hammer here, follow through, Morningstar family, and then we start moving sideways. So that would have been a good buy in here, either here or any one of these 3 days would have been the buy, the entry. Speaking of entries, if you've ever been to our webinars or heard me talk about entries, you know that I'm not a fanatic about entries. I used to be. I found that was a losing proposition because you're always trying to catch the rabbit before it runs down the rabbit hole. Rather than do that, let the rabbit put the trap down in the rabbit hole and let the rabbit run into the trap. So you know, if I have a chart pattern here that I have the possibility of making somewhere in the neighborhood of 10, 15% do I have to get all 15%? Do I have to, you know, do I have to just, like I say, catch that rabbit right before it goes down the rabbit hole? No. Could I be happy with 8%? Absolutely. Could I give up a couple of percent on the entry? You bet. Not going to chase the entry. You never catch the rabbit. You just never do. You know, every once in a while the rabbit keels over and you bend down and pick it up and you think you caught the rabbit. That's just, it's just very hard to catch it before it goes down that hole. So I look at the chart pattern, I trade the chart pattern to what I think the chart can do for me. In this particular strategy, that 10% is what I'm looking for, give or take a percent or two. So here's, excuse me, SIG, S-I-G. And yeah. Alrighty, so let's look at CGI. Now, we made some good money in this one. This was set up as well. Here we are in a nice little downtrend, and it started moving sideways. And here's one of these cases where this alerted as a pinball setup, and then it started moving below the T-line. If it closes below the T-line, you need to seriously consider closing out the position, or if you have the, I don't know how to say this other than just get right out and say it. If you have the skills to work with support and resistance, then you might not close this just because it closed below the T-line, because what happens is you can clearly see that this would be the support level, and it just made a little pullback, just an inside day, really. It's an inside day to the big move up. And I think if you ever traded this type of chart pattern, I think you'd be pleasantly surprised. You know, stocks that pop, pull back on an inside day, man, give it some time and look at that thing start to work. So let's say you did buy it here and you weren't stopped out. You're looking at what, 6%, maybe 7%. And then as it started moving back up, it got to your target level for about 20 to 25%. So you just had to live with it through a little bit of this. Of course, if you didn't buy it here, or if you were stopped out, then you could have certainly bought it back as it started moving very near or above the T-line right in here, and that rallied right up to that 34. In fact, just slightly past it. So really, we'll take it back over here. If you lived with this, if you sold half at the 34 for 23%, maybe you got up there to 40%. You thought, well, hey, 40% is plenty, and you might have taken that off the table as well. Otherwise, maybe you're still in it, just letting it move sideways. I'd be careful with that candle today. But okay, so let's see. There's another one. Did I mention? Yeah, I did. I mentioned that one. MAC. We already talked about that. VRS. Here's one, and this is maybe one getting set up to move a little higher here over the next few weeks, maybe, kind of depending on what the market does. So here we've been in a downtrend, and now we're starting to create that construction bottom down here. And you can see how this ran up, and there was a little 15 to 17, depending on where you entered the trade. It closed back below this day, but you can see it stayed over the high or the low of this candle, the big candle that broke us out on a little bit of volume as well. Everything stayed above that level. So just by working with that, we worked right up to the 34 EMA. Again, you know, this whole, man, I have a hammer, I'm going to buy this hammer. hey, that's all fine and dandy, but I think if traders are truly honest with themselves, they would go back and look through their trades, and they could see that they actually make very little money picking the bottom. Oh, sure, they have a winner here and there, but the losers by far outnumber it. Let's see. Is that? I see, Renee. Is that a question to me? That little box there. Let's see. If you buy anywhere in the box, does that mean you do not enter only when it pops out of the box? No, I'll enter inside the box as well. Now, inside, you know, each trader has a choice to make on how you want to trade. But, you know, let's say I was to box in, say, this candle. So it broke out. So are you a buyer? You know, whoops, there we go. Are you a breakout buyer, or are you willing to buy inside that box? I'm very willing to buy inside that box. I also buy on breakouts. When I'm looking at a chart, and this is on any chart pattern or any strategy I look at, I want to make sure I can make money on the chart. And if we just took this VRS, let's think about this. What can this chart do for us? Keep in mind, this is for swing traders. This is not for day traders. And you're willing to hold the chart for several days, as long as the chart continues to work. Well, we see this down move here. We see a little bit of a bottoming action going on. We break out, and then we pull back. But if you notice, we have a low, a higher low, and then we just all inside days. So we've established our support level right there. That would establish a little bit of support level right on top of that little hammer right in there. So I wouldn't be afraid at all buying this, but I also can recognize that where's this chart going to? And I mean, one of the major places I see is right here where this big candle came down, and then we couldn't get back above it. So support, resistance, and down we go. So I look at that as being the target right in that area, and that's right where it came to. So if you bought inside this box, let's pick a spot. Let's see, I can't, let's pick right here. Let's pick $3.68. Can this chart do something for me? Sure, 32%. Okay, what if I waited for a breakout? So let's say we bought here, $3.94. What does that give us? 21%. Look, I don't know a trader out there that would thumb their nose at 21%. So could you have waited for a breakout? Absolutely. Absolutely. So I will trade both the inside the box or the breakout of the box. I hope that was for me, and I hope that was good enough there. So thank you. All right, let's see. It looks like I've got about 5 minutes left. Let's see. I think there was a couple other charts. CLD. I'm not sure. Yeah, CLD. Here we oh, I see what I was doing here. See how we moved down and we started to put in this stick sandwich. We have a low, nice little tail, a little bullish engulf, a bearish candle, and then we start putting in a bullish candle. Well, if you follow the sticks at all, I mean, you're quick to recognize, hey, we could put in a little stick sandwich here. And if that's the case, and it closes up, that's going to be kind of bullish. So you're either ready to buy it as it moves over the T-line, maybe buy it early with the idea it must close over the T-line, or you wait to the very next day. And if that's the case, then well, this day finishes, what we're going to do is just put a box in right like that. This would have been the buy anywhere in this area here. And let's pick, you enter at 3 1/4. Well, up to the 34. That gives you just, I mean, that's shy. That's very shy of what we're looking for. But you can see how that type of chart pattern, once you get it on top of that T line, that's the reason I wanted to show you this right here, is how it gets up there and it just, it leads into other chart patterns is what it does. Okay, to be honest, I'm for the most part finished. Looks like I'll finish up a little early. I did mention that anyone here, I want to thank you all for being here. But if you wanted to go to Hit and Run Candlesticks and just click on at the top of the page here, I can bring up that page for you, and I will show you. And I'm going to give you the password for the rest of the month, and please be my guest coming into the room here. If you just click on Trading Room Login right there, and then you go to Trading Room 1, and just simply enter the password, your email, and enter the password 1984. Well, I guess it's not going to show up, is it? 1984, and then click enter enter the trading room, and then what that will do is get you in there, and I'll be more than happy to answer any questions that you may have about the pinball setup, or for that matter, anything we trade with or use here at Hit and Run Candlesticks. We also have a options division. In fact, Doug is in the trading room right now, probably talking about some options.